Hello everyone. In this video, we are going to see a simple option selling strategy which gives us slow and steady returns over a period of time. This is a very consistent strategy which option sellers can use and generate regular monthly income. First, let's look at the agenda. We start with the introduction and then we move to options strategy itself. And then we look at the backtesting results, and finally we look at a fully automated trading tool that can completely automate this trading strategy. All right, so there are so many advantages of this strategy, and the first is it generates consistent returns. When I say consistent returns, on an average every month we can earn around 4 to 5%. Please remember, this 4 to 5% is an average. Some months we might earn even 8 to 10%, and some months we might even get 1% or even a minor loss of 2%, 3%. But the point is, over a period of time, after 1 year, if you see, you get an average return of 4 to 5% per month, which is around 40-50% per year. And then the second point is slow and steady trading. This is like a tortoise trading where we don't aim for so much of profits, because if we aim for so much of profits, losses will also be more. Rather, in this strategy, we only look at small profits and small losses. Slowly and steadily, we move like a tortoise, and at the end of the year, we reach our destination of 40% or 50%. And then it is profitable most of the months in a year. This is very important to get confidence while we are trading in any strategy, right? So out of 12 months in a year, almost 9 to 10 months we end up in profit. It can be 1%, 5%, 10%, but we end up in profit after all the expenses. And 2 to 3 months we also get losses like minus 2%, minus 5%, minus 4%. But as I said, most of the months we end up in profit. And the last but not the least, the time and effort that are required to execute this strategy is very, very less. You just need to spend 5 to 10 minutes. We will show you how to automate this strategy. But for now, just remember that after the automation, you just need to spend 5 to 10 minutes every day to see whether this automated trading tool has sent the orders correctly or not. If it has sent, then you can go back to your work. So the time and effort that we need to spend on this strategy is very minimal. Okay, so now we will see what are the 6 rules of this MJ strategy. First and the most important is we only have to trade in Nifty or Bank Nifty. This is because there are so many volumes in Nifty or Bank Nifty, and volumes are very important when we are executing any strategy in any instrument. So first point is we only have to trade in Nifty or Bank Nifty. This will not work for stock options. And the second point is we enter into a short straddle in the morning and exit in the evening, which means this is purely an intraday strategy. The reason why we trade only in intraday is we don't have control on what is going to happen overnight. If we take a positional trade, next day markets might gap up or gap down 10% and we might lose most of our portfolio, right? Rather, if we trade only intraday, everything is in our control. Profit or loss, we end up on that particular day and come back with our money. And coming to the strategy, it's a very simple short straddle. We enter into a short straddle in the morning and then we exit in the evening. So for those who do not know what is a short straddle, we enter into at the money, call option and put option. Let us say they are trading at 100 rupees, and at the end of the day, whatever is the profit or loss, we exit and we come out of the trade. So it's a simple short straddle, but of course there are certain rules. Only if we follow that rules, then we get some good return every month. Before talking about those 4 other rules, let's talk a little bit about market movement. There are 3 types of market movement that happens on any given day. First one is consolidated markets, which means markets do not move so much on that particular day. Maybe 5-10 points they move upside or downside, and then again they come back to the original price. If that is the case, we get profit in both the legs. This might fall down to 95 and this also might fall down to 95. Remember, we are option sellers. We are shorting option straddle, but we are not buying. So if you are an option seller and if you sell option at 100 rupees and 100 rupees, and if markets are not moving, then both the options will fall and we get profit in both the legs. Now, the second type of market that we generally have is markets might travel unilaterally. Markets might fall 300, 400, 500 points, or markets can go up as well, 400 or 500 points. Right? This is the most common question we get from people. Because we are option selling, there is a chance that markets can go down drastically 400 or 500 points, and this put option which we sold at 100, this might shoot up to even 500 points also, and as option sellers we might get a huge loss of 400 points. So answer to this point is our next rule, to have a strict stop loss on individual leg basis. So what we have to do is, after we enter into the position, call option and then the put option, let us say in this example, we sold call option at 100, we sold put option at 100. Now we have to place a strict stop loss of 30% on both call side and then put side. Now, let us see what happens if this scenario repeats. Let us say market falls 400 points or 500 points. In that case, from 100 rupees, market slowly starts going up to 500 points. But since we have a strict stop loss of 130, first it will hit our stop loss and then it moves up. So we get a limited loss of 30 points in this case, and after it hits the stop loss, it doesn't matter if it goes to 400 points, 500 points, or even 1000 points. So we get a loss of 30 points on put side since market fell drastically. But let's see what happens on the other side, which is call side. Now because markets fell a lot, this call option might even come down to 10 rupees also, right? Because markets moved 400 or 500 points. So at call side, we get around 90 points profit, 80 points or 90 points. So on one side, we are getting 30 points loss, and on the other side, we are getting 80 or 90 points profit. So the net profit on that day would be around 50 to 60 points. So if someone asks me what happens if market falls 400 or 500 points, our answer is that day we get maximum profit, right? And then the third case that we have to talk about is what happens if market moves on both the sides. This is a risky trend where our stop loss might get hit first on the call side and then market reverses and then it hits on the put side also. So for this, what we have is our next rule. The next rule says have a strict trailing stop loss when the position reaches 30%. So let's take the same example again. We enter into a call option and then we enter into a put option at 100 rupees and at 100 rupees. And we place a stop loss of 130 on both the sides. Now, let us say market first went up and our call option also goes up. It hits this stop loss and we get a loss on this side. But on the other side, which is put, this comes down, which is good for us as option sellers. Let us say this came down to 70 rupees or 75 rupees. Now what we do is, since we are in profit, we will trail this original stop loss of 130 to, let us say, 100 rupees or 105 rupees. Now in the second half, due to some bad news, even if market reverses, this put option also reverses, nothing will happen to us because we already trailed our stop loss. It will hit the stop loss first and then it goes to 400 or 500 points. So this put side we got no profit, no loss, and on call side we got a minor loss. We have to understand that we cannot completely avoid the losses, but we need to minimize them, which will eventually give us profits in our portfolio, right? So the third case, we are dealing using a trailing stop loss. So as we discussed in the first case, which is a consolidated phase, that case we get profit. In the second case, where markets are moving hugely upside or downside, that case we get good profits. And the third case, when markets are swinging wildly on both the sides on a particular day, that day we are coming out with minor loss. And the next point says trade only in weekly options. That is because only weekly options give us good profits due to this time decay. The main reason why we are getting profit in this strategy is because of time decay, and time decay is maximum in weekly options but not monthly options. So we always have to trade only in weekly options. And the last one is trade at least for 3 months. We need to trade in this strategy at least for 3 months. Only then we understand how good this strategy is, how slowly and steadily it gives us profit. So make sure that you trade in this strategy at least for 3 months. Now we will look at the backtesting results, and then we will move to the trading bot demo. This is a simple backtesting results for the last 2.5 years. The most important column we need to focus on is this N column, which tells us how many months we are ending up in profit. As we mentioned initially in the video, almost 9 to 10 months we end up in profit. And 2 to 3 months we also get a minor loss of 4% or 5%, which should be acceptable. And the capital required for this would be 1.4 lakh for Nifty after all four phases of peak margin rule, and also after including 15-20,000 of buffer amount, we need 1.4 lakh for Nifty. And if you wish to trade this in Bank Nifty, you need 2 lakhs, and the accuracy for this would be around 65 to 70%, and the drawdown here would be around 10 to 15%. So at any given point in time we might slowly lose our capital 10 to 15%, but we still have to stick to the strategy, and that will again bring us back to the profits. Now that we have seen the backtesting results, let's move to the most important part of this video, that is nothing but the trading bot. All right, so here's a simple trading bot that can completely automate this strategy. We don't need to initiate this strategy ourselves, or we don't need to track the trailing stop loss or exit from the strategy every day ourselves. Everything will be done by this trading bot. Let us see how this operates. You have two rows here. One row is for Nifty and the other row is for Bank Nifty. You can see there is a column called status column, which says whether the bot is enabled for each of these two strategies. As you can see, the bot is disabled for Nifty here, and if you want to enable, simply all you have to do is click on this green button, and it will ask you whether you want to enable this bot. If you say yes, then the bot will be enabled for this Nifty strategy as well. Also remember one very important point, this is a fully automated trading bot, which means you just have to do a one-time setting, and from the next day trading will happen in your account. You can operate this from your mobile or from any other device. So we have already seen how to enable and disable. If you again want to disable this strategy, hit on this red color button. It will ask you if you want to disable. Just say yes, and then the bot will be disabled and trades will not happen in this. Remember again, you don't need to do this operation every day. It's a one-time operation. But in case if you wish to disable the bot on any particular day, you can use these colored buttons. And we also have given all the options here to modify in case if you have your own custom strategy, or in case if you want to avail our strategy using our parameters, you can use this. We will tell you all the parameters that we use so that the trading system becomes very safe and the returns will also be very decent. Let's see what are the options available here. We have an option to select the number of lots based on the capital. If you have 1.4 lakh, you can select one. And if you have, let us say 14 lakhs, you can select 10 short straddles of Nifty. We also have an option to give entry time. If you give entry time, bot will exactly take a short straddle at this time. Let us say 10 o'clock is your entry time, then the bot will take an entry at 10 o'clock. Likewise, you can also give exit time. If you give exit time as 3 o'clock, bot will exit exactly at 3 o'clock. You can give the strike range as well. Strike range actually let the bot know whether you want to trade in ATM, ITM, or OTM strikes. If you give 0, it means ATM. The bot will understand that it has to trade in at the money strike prices. If you give 100, then it becomes short strangle, which means the bot trades in out of the money call option and out of the money put option. And you can also choose whether you want to trade using SL market order or SL limit order. You can choose one of these two options for your stop loss. Because of free trades and all, these days people are moving to SL limit. So you can also use SL limit order if you want to exit. So all these options are defined in the video that you see below this table. Every column is defined and explained in detail, and once you get access to this trading bot, you can go through this video and know about each and every field. And then the other page that we have in the left hand menu is brokers. This is also a one time setting where you have to connect your trading terminal with this bot. This is also a one-time setting where we establish a connection between this bot and your LS Blue or any other broking terminal. All you have to do is just watch the video and follow the steps. It is very easy process. Even a 10th class person can follow the steps and do the configuration. Once after you do the configuration, you have to hit on this test button. Once you hit on this test button, you get to know whether the connection is successful or not. Once the connection is successful, bot will start sending orders from the next day. So these are the two pages where you have to do one time setting, and it hardly takes 15 to 20 minutes. And once after you do the setting, orders will start firing into your trading terminal. Now let's look at the last part. Who can avail this trading bot? This trading bot is useful only for those who are conservative and non-risky traders. And this bot gives you slow and steady income. So if you are someone who likes to have slow and steady income, then this bot will extremely be useful. And you should be okay with 10 to 15% drawdowns as well. At any given point in time, you might lose 10 to 15% capital, and you have to stick to the strategy and continue trading in this. And you have to be okay with daily and weekly losses as well, because we also get daily losses and weekly losses. What's important is to end up in profits after 1 month. Of course, as I said, out of 12 months, 9 to 10 months we get in profit, and 2 to 3 months we get a minor losses as well. But most probably at the end of the month we end up in some profit. And who can trade continuously for at least 3 months? And last but not the least, you need to have a lot of patience and discipline. So if you wish to avail this trading bot, you can contact on the numbers you see on the screen, and you can also visit the website. I hope now you know a strategy which gives you a consistent, slow, and steady returns every year. And if you have more questions, you can contact us on the number that you see on the screen, or you can also visit our website. Thank you for watching the video. Have a good day.